Welcome, and thanks for listening to Cherry Bekaert's Not-for-Profit podcast series. In each episode, we hear from the best in the business on the latest challenges, trends, and opportunities affecting not-for-profit organizations and educational institutions. I'm Matthew Saha, leader of Cherry Bekaert's not-for-profit industry practice. I hope you enjoy, and thanks for listening.
Hello, I'm Amy Dosik, and I lead Cherry Bekaert's not-for-profit tax practice. I'm here today with you to talk about the Section 179D Energy Efficient Commercial Building Deduction for not-for-profits. I'm delighted to be here with members of our Credits and Incentives Advisory tax practice who are going to tell you a little bit more about how your organization can benefit. Martin Karamon leads our practice, so I'm going to throw it over to Marty to introduce himself and the members of his team.
Amy, we're delighted to be with you today as well. I am Martin Karamon. I'm the head of our Tax Credits and Incentives Advisory Group. We're a group within Cherry Bekaert that focuses on bringing both cash benefits and tax deductions and incentives to companies for a variety of activities. I'm joined today by Ed Vettel and Andre Kohn, two of the experts in my group who are specifically working around Section 179D and the method to monetize Section 179D for not-for-profits. And so I'm going to hand it over right now to Andre and Ed to talk a bit about 179D, their backgrounds a bit. And Amy, feel free to lead through and ask us some questions.
All right. Well, thanks, Marty. So for all of our listeners out there, thank you for joining our TED Talk here. My name is Andre Kohn. I can't believe it's been close to a decade where we've been working to strengthen American businesses, specifically through 179D. So we've worked to secure and deliver a little over $1 billion in incentives over the years. And it's just really cool to see how this works out for all of our clients. So Ed.
Yeah, thanks, Andre. So my name's Ed Vettel. As Marty said, I've been working with 179D for almost a decade. Before that, was doing construction administration and project management for large construction projects. And then my background before that was electrical engineering. So I've got a little bit of that design space mentality as well. But yeah, excited to be here, and thank you, Amy, for bringing us together to talk about this stuff today.
Great. Andre, could you walk us through some of the changes to Section 179D that came from the Inflation Reduction Act and how nonprofits and schools can benefit from the credit in a more enhanced way now?
Sure. So I just want to take a quick step back and take a look at the history of Section 179D. So it was originally enacted by the Energy Policy Act of 2005. So 179D is formally known as the Energy Efficient Commercial Building Tax Deduction and rewards commercial building owners and designers who construct energy efficient commercial buildings. So the tax deduction was worth up to $1.88 per square foot through 2022 if the cost savings exceeded 50% over an ASHRAE baseline standard from 2007. But in 2023, everything changed via the Inflation Reduction Act, and that's what we're really here to talk about today. So what were some of those changes? There's a 25% energy reduction over that same ASHRAE 2007 standard that gives you that baseline qualification. There's also a triennial reset of the deduction. So every 3 to 4 years, as long as there's been a renovation or addition to the building, the deduction can be taken again, when before it can only be taken once. Private schools, charity hospitals, nonprofit organizations, religious institutions, and other non-taxpaying entities can now allocate the deduction to a qualified designer. There's also some new prevailing wage and apprenticeship program requirements that Ed is going to talk about here in a second. But last and certainly not least, the sharp increase in deductions up from $1.88 in 2022 to $5.65 in 2024. So that means that same 100,000 square foot building that yielded $188,000 in tax deductions in 2022 could be worth a little over $500,000 now in tax deductions. So really excited to talk about that today, you all.
Yeah, that's really exciting. Ed, could you tell us a little bit about how nonprofits or schools can determine if they're eligible for the 179D credit or deduction?
Sure. Yeah.
Go ahead, Ed.
So this, to clarify, so this is a deduction that is eligible for taxpayers to receive. Nonprofit entities would allocate this deduction to a designer of the facility upgrades. But I guess to start off, what nonprofit owners should think about when looking at 1790 or any eligibility is a project that is any sort of new construction or renovation to their facilities that would include one or all of three components: the HVAC and hot water, the interior lighting, or the building envelope or shell of the building. So any project that is involving an upgrade or new construction projects as well, that is something that they should be thinking about for 179D. And something we always want to mention too, it's called the energy efficient commercial building deduction, right? So the mindset is often, oh, this has to be a LEED project. This has to be something significantly more efficient. That's not actually the case. Because of the way that the tax code requires us to perform this energy analysis, we take a look at the building as it stands today, or the building as it will stand once the project is completed. And then we compare that to an ASHRAE 2007 standard, so a 17-year-old commercial building standard. So any project that is involving mechanical upgrades or interior lighting, whether you think it's efficient or not, you need to talk to us about it, because anything you're doing today is going to be significantly more efficient than that 17-year-old standard.
That's really helpful. Thanks. So, Andre, can you tell us a little bit about the benefits of the 179D deduction?
Yeah, Amy. So notice 2008-40 really gives us the framework for the allocation process, and I'll paraphrase here. So it states that the allocating party, in this case, the nonprofit organization, is sovereign on which qualified designer they allocate to and how much. So kind of like Ed said, this was a program that was created for the taxpayers, but with the expansions of the recent Inflation Reduction Act, our nonprofit organization clients have worked with design teams to negotiate a reduction in construction costs, extended warranty periods to offset future costs. There's also additional funding for the campus programs via a donation back to the nonprofit. So with nonprofits now able to allocate the 179D deduction to qualified designers, it's important to get with our team here at Cherry Bekaert involved, or let us get involved as soon as possible, so that we can help you when you're considering that renovation or that new construction project to understand what the potential deduction amounts could be and walk you through the process.
Great. I understand there are also enhanced deductions if certain prevailing wage and apprenticeship requirements are met. Can you walk us through the process for ensuring that a project meets these requirements?
Yeah, absolutely. So, you hit the nail on the head. The Inflation Reduction Act introduced this new concept of a bonus deduction, and that's based on certain criteria being met with regards to prevailing wage and apprenticeships. So to qualify for the bonus deduction, all laborers on the project must be paid prevailing wages for that region. And additionally, a certain percentage of all labor hours on the project need to be performed by qualified apprentices. So to ensure that these requirements are met, that involves reaching out to the Department of Labor if the rates aren't already posted, but if they are not posted, reaching out to the Department of Labor to confirm the prevailing wages, as well as reaching out to a qualified apprenticeship program to request these apprentices for your project. This is important too, that second part, because there is a good faith exemption where, if you reach out to a qualified apprenticeship program and they just don't have enough apprentices, the tax code, they put in a provision there, well, hey, you made a good faith effort, so you can still qualify for this bonus deduction. So it's super important. It's very valuable. It basically is a 5 times multiplier for the potential deduction. So it's something, that we should definitely be looking at for all projects. And these aren't necessarily new concepts in the construction industry. It's just these are requirements that we need to be looking at. So we can help identifying these, working with you to communicate this to the contractors on your project, and even putting in language in the contracts about meeting the requirements, and especially important, how to document those to make sure that everything meets the requirements.
Thanks, Ed. It sounds like those requirements require some front-end planning and some thought on the front end of a project. I'd love to hear from the team how Cherry Bekaert is working with clients to make sure that they're maximizing their 179D deduction opportunity. If you could talk about that a little bit.
Let me talk really quickly about that at the beginning. One way we do that, and I think the philosophy of the group, is to make sure that we're working with clients in an easy way for them. So we do all the work up front to scope out the benefits and discuss with our clients what their projects are, which designers they're working with, where those designers are located, so that we can adequately assess what benefits may be available to them. And then going forward, giving them ideas about how they can best monetize these deductions through one of the mechanisms that Ed and Andre just discussed earlier. I just think that the most important thing that we do is to make it easy on them, such that we are spending our time doing our homework so they feel like they're comfortable getting involved in the project, and they have the time to spend working with us so we can really identify all the projects that may be available for them.
Great. So for our listeners, if they take one thing away from this podcast, what do you hope they'll remember?
I hope they remember that they should definitely call us, even if they have any inkling as to whether they think they may qualify. And also, it's not just what they're doing now, but it's what they're going to plan to do going forward. So if they have a capital plan in place, talk to us about it, and we'll give you some sense of whether or not it's going to qualify for that, or potentially other incentives as well.
Yeah, agreed. And as I said earlier, this deduction, don't necessarily think it has to be some super energy efficient LEED solar program. If it involves construction on a commercial building, come talk to us. Let us take a look at it. We're here for you.
And I'll say lastly, over the years, we've had clients who've been able to hire additional staff, construct or expand their own offices, upgrade to some of the latest and greatest technology, and even seeing the Inflation Reduction Act increase the deduction amount by so much, now nonprofit organizations can use these funds as a supplement to strengthen and expand their programs and their building projects. So yeah, definitely looking forward to working with you all on some of your upcoming construction.
Wonderful. Well, Marty, Andre, Ed, thank you so much for being with us today to talk about the new opportunities around the 179D energy efficient building deduction. I'm Amy Dosik, and if you want more information or want to contact our team to help you with a project, you can reach me at amy.dosik@cbh.com. That's amy.dosik@cbh.com. Thank you, everyone, for listening today, and we look forward to talking with you soon.
Thank you, Amy, for hosting us. We appreciate it.
Absolutely. Thank you.
This is Matthew again. I hope you enjoyed this episode and look forward to our next one. Don't forget to subscribe.